Okay. Um, Good afternoon from my side. Tasha, I'm grateful to have you
Yes,
in this Zoom session. So today we are going to talk about market structure and the Dow theory. So in Forex trading, there are many ways in which traders are used to approach the market, many ways traders use to make money from the market. So irrespective of whichever way you are using to make money in the market, there are basic things every trader needs to know. And market structure is one of the important topic in the Forex industry. And for me, market structure is like the foundation every Forex trader needs to know. So, and I'm going to tell you the importance of this market structure because we don't trade, or personally, I don't trade with indicators. So I trade with the naked chart because of the knowledge or the deep knowledge I have in market structure. So understanding market structure is one of the most important aspects of analyzing and trading the Forex chart. Market structure gives us a vital information about what current phase the market is in. Market structure tells us a story on the chart. It opens our eyes to understand a new ways of market movement. So in trading in the Forex market, people use a lot of indicators, customized indicators, to determine the trend of the market. The problem of every trader is to know which or the direction which the market is going, because it is a marketplace and it is determined by the sellers and the buyers. So if you come into the market, the Forex market will give you an opportunity to either to become a seller or to become a buyer. So that is why it is very important whenever you open your Forex chart, you open your trading view, you open your MT4, MT5, the question is, where is the market going? You want to know where is the market going so that you can now trade in that direction. You want to know between buyers and sellers who are leading in the market, because it is not a physical market, it is a global network. So since we don't see, just like the physical market, you can see people passing, you can, price face to face with people, but this one is being represented by the candlestick chart we see, right? So we want to look at the structure of the market. We want to see it is this structure of the market. It is this knowledge of market structure can, tell us that between sellers and buyers, buyers are leading or sellers are leading. That is why it is very important for us to have a deeper understanding of market structure. And some other people who doesn't know market structure, they use indicators. So we have what we call indicators on MT4, MT5. So these indicators like moving averages, we have different settings to set our moving averages. The purpose of those moving averages is to tell us the trend of the market, means that we want to determine is the market going downward, or is the market going upward? So when you use moving average 200, moving average 50, so when you are using moving average 50, for instance, when the market is below moving average 50, it means that the market is in a downtrend. So, and when the market is above moving average 50, it shows that the market is an uptrend. So most traders use indicator to determine the trend, but we don't use indicators because we have a deeper understanding of market structure, which I want you to know. It is very important. I call it the foundation, and which is why I said in my first statement that understanding market structure is one of the most important aspects of analyzing and trading the Forex chart. So in this Zoom session, I'm going to talk about the three types of market structure. There are only three types of market structures, which is the uptrend, the downtrend, and the consolidation. So this is the only way in which the market moves. Whenever you open your MT5, whenever you open your trading view, you always meet the market in one of these conditions. Whether you meet the market moving in an uptrend, which is this one, or you meet the market moving in a downtrend, or you meet the market consolidating, right? So now we have known the three types of market structures. So How do we identify an uptrend? How do we know with the knowledge of market structure? Are you there? Can you hear me?
Yes, I'm here. I
Can
can
you
hear
hear me
you.
right?
Yes.
Okay. So how do you know that it is an uptrend, it is a downtrend, it is a consolidation? So we have characteristics of these three types of market structure. They have their characteristics. It is through their characteristics we'll be able to know, oh, it is a downtrend, it is an uptrend, or it is a consolidation. So now let's start with characteristics of an uptrend, which is this one. So whenever the market is moving up, there is what we call a higher high, higher low. Let me zoom it. So it's one of the most common terms in forex trading. Almost every trader knows higher high, higher low, but not every trader can really apply the concept in the real life market. Not every trader knows the application of this market structure, but it is a very common term in forex trading, right? But I don't want you to just know about the three types of market structure. I want you to know about the three types of market structure and the application of these three types of market structure, because it is this market structure that we use to apply our strategy for us to make money in the market. Because when we know how to apply market structure in our trading, we are going to increase our number of winning and reduce our number of losses. Of course, in trading, there is no how you will not lose. But how many times do you lose compared to how many times you win is what is going to make you a profitable trader. So for us, we win most of the time. We win most of the time compared to the time we lose. And we also use risk management. So because of what we have an in-depth knowledge in market structure. So whenever the market is moving in an uptrend, it is characterized by a series of higher high, higher low. So let me demonstrate. I'm going to remove this one. So let's say the market started from here. You know, hello? Hello?
Yes, I'm here. Was that
Okay,
was that on my
yeah,
end?
welcome back.
I'm sorry. Was that on my end?
Can you hear me now?
I can.
Hello?
Yes, I'm here.
Okay, okay. So what I'm trying to say is that whenever the market is moving in an uptrend, the market does not move in a straight line, or price does not move in a straight line. Price move in wave. So this is how price move. Impulse, correction, impulse, correction, impulse, correction, impulse. So, which is why I said whenever the market is moving in an uptrend, is creating characteristics of what we call higher high, higher lows, higher high, higher lows. So take, for instance, maybe price started from this point here. So this is a low and price moved to this point before the price retrace. So this movement here is what we call impulse. And this one can be called correction, retracement, or pullback. So price move to this point, price retrace. It created a high, and now price retrace and then create another low. But the reason why this one is called a higher low, it is because of it's higher than this low here, is higher than the previous low. So the market formed a new low here, and the market move up again and then breach the previous high and created a new higher high. So the reason why this one is called a higher high, because this new high is higher than the previous high. All right. So as the market is moving in an uptrend, is breaking this previous higher high while respecting the higher low. So the market cannot come close or below the previous higher low. So it keeps respecting this higher low. That is why we have higher low, higher low, higher high, higher low, higher high. So whenever the market moved up, and break a higher high, it is called break of structure or breaks in market structure. So characteristics of an uptrend is this: market will keep breaking the structure high and respecting the previous higher low. So the market cannot come below this one. This one cannot come below this one. This higher low cannot come below the previous higher low. So the market will keep respecting the higher low, then breaking the higher highs. So whenever you see this kind of break of structure, the market is breaking the higher high, respecting the higher low. This is a characteristics of an uptrend. And it is because of this, we now know that, okay, the market is in an uptrend. So we now know that the market is being controlled by what? Buyers. Buyers are now leading the market. So in this wise, we will now submerge ourselves as buyers. Because like I told you that when you come into the chart, when you open your ForeX chart, you have to determine between buyers and sellers who are leading so that you join them. If buyers are leading, you now become a buyer at that particular point in time, or at that particular day or particular week. If buyers are in control, you now become a buyer. If sellers are in control, you now become a seller. But how will you know that sellers and between sellers and buyers, how will you know who is in control? It is because of what? The knowledge of market structure. Market structure tells us between buyers and sellers who is in control. It gives us an in-depth knowledge that, okay, buyers are in control or sellers are in control. And that is why we study characteristics of an uptrend. So whenever we see these characteristics of an uptrend, we know that, okay, we don't need any indicators to tell us. We don't need any other person to tell us that it is an uptrend. Through the knowledge of market structure, I will know that an uptrend is characterized by a series of higher high, higher low, higher high, higher low. As I've explained to you, you should be able to know that, okay, it is an uptrend. Are you with me?
I am.
Do you understand?
I do. Can you hear me?
Do you understand?
Yes.
Okay, okay. So now we'll come back to uptrend. Let's talk about the downtrend. So this is a downtrend. Let me remove this one. So when a market is moving in a downtrend, remember uptrend represent buyers, downtrend represents sellers. So whenever the market is moving in a downtrend, the market, like I said, market does not move in straight line. When the market moves in straight line, it will be very easy for people to trade, right? Okay, you know that, okay, market is moving down, you just sell. The moment you sell, the market will keep going down. But the market moves in wave, like I told you. It moves impulse correction, impulse correction, impulse correction, like that. So how will you know that it is a downtrend? A downtrend is characterized by what? Series of lower high, lower low. For instance, let's say the market started from this point and dropped down. This drop is what we call impulse or impulsive move. Then this retracement is what we call correction, retracement, or pullback. But I like to call it correction, right? So the market started at this point and then the market dropped and formed a low. This become a high and this become a low here. And then now the market make a retracement and form a new lower high. So the reason why this one is called a lower high, let me clear. The reason why this one is called a lower high, it is because this high is lower than the previous high. So when the market is moving in the downtrend, look at how it's creating. It's creating a new lower high and then break this previous lower low and form break this previous low and form a new low here, right? Then the market went retrace back again and form a lower high. So when the market is moving in a downtrend, is respecting the lower high while breaking the lower low. So it keep breaking structure. So whenever the market break this structure and retrace back, break a structure, when we see these characteristics, we'll know it is a downtrend. It keep breaking the lower low while respecting the lower high. The market cannot come and be above this lower high. It will respect the lower high and then drop and break the lower low. So it's breaking the structure low while respecting the lower high, breaking the structure. So whenever a structure break like this one, it is called break of structure, break of structure, break of structure. So the abbreviation of break of structure is what I put there, BOS. So whenever you see BOS, means break of structure, right? So this is the characteristics of a downtrend. Any questions so far?
Not so far.
Okay. I hope you understand the concept of market structure, right?
Right.
Okay, okay, thank you for that. So let's talk about consolidation. So whenever the market is creating characteristics of a downtrend, this means that sellers are empowering the market, like this example. Whenever the market is creating characteristics of an uptrend, it means that buyers are what? Controlling the market. So whenever the market is moving in consolidation like this, so I'm going to remove this line again. So in this wise, the market is not moving like this as the structure of an uptrend. The market is not moving like this as the structure of a downtrend. Rather, the market is moving horizontally. So characteristics of a consolidation market is either you call it consolidation or you call it ranging, right? Or sideways. So whenever the market is moving sideways or horizontally, it creates equal highs and what? Equal lows. So it is this equal highs and equal lows, we call it support and resistance. That is why I put here resistance, resistance, support. So when the market is moving like this is what we call consolidation or ranging. In this case, in this type of market structure, it is not even good to trade. So in this way, psychologically, this means that neither buyers nor sellers are empowering the market. This market between sellers and buyers, they are in equilibrium. Nobody is leading. Buyers are not leading, sellers are not leading. But this market structure tells us that buyers are leading. This one tells us that sellers are leading, right? And consolidation is trying to tell us that neither buyers or sellers are leading. The market is consolidation. We call it accumulation. We call it accumulation. So in this wise, if you want to trade this kind of structure, it is as simple as ABC. You just sell as support. Sell as resistance, then buy as support. So I'm going to show you these characteristics of market structure in the real ForeX chart. I also want you to realize that this is just the drawing. This is just the drawing. The market is not going to draw it like this, because when the market draw it like this, when the market draw present market structure perfectly the way I draw here, the market is going to be so easy for everybody to trade. This market is not created to make us rich. The market is created to take our money. That is why it is very difficult for one to make money in trading. You have to go through some series of training for you to be able to make $1 in the market, or else the market will keep taking your money, because it's not designed to make us rich. It's designed to take our money. So that is why they don't want to present these characteristics of market structure I'm teaching you right now. They don't want to represent them on the chart clearly. They are going to represent in different ways. But if we understand and study the characteristics of market structure, no matter how they present the chart, we are going to know, oh, it is an uptrend, oh, it is a downtrend, or it is a consolidation market. So that is why we'll focus our attention more on this market structure. This is just market structure 1. After this one, I'm going to also teach you market structure 2. I really want you to understand the concept of market structure, because it's going to make you a better trader. So we have talked about the 3 types of market structure, which is the uptrend, the downtrend, and the consolidation. And we also talk about characteristics of these 3 types of market structure. Like I said, there is no any other way in which the market moves. When you open the ForeX chart in the night, when you open the ForeX chart in the afternoon, when you open the ForeX chart in the evening, it's either you meet market in any of these conditions, any of this type. Either you meet the market in a downtrend, or you meet the market in an uptrend, or you meet the market in a consolidation, right? So whenever you see an uptrend, you should become a buyer. Whenever you see the market is giving you characteristics of an uptrend, then you become a buyer for that day. Whenever you see that the market is giving you a downtrend, characteristics of a downtrend means that sellers are empowering the market, then you become a seller. We want to follow the trend. We want to trade in line with the big players who are controlling the market, because they are the ones who are moving the market bullish or bearish, right? So they are the trade with a lot of trillions of US dollars. So you don't want to come into the market with your $100, with your $200, with your $500, and when the big players are selling, you are now buying. You lose your money. So we want to determine where is this big player going, where is the market going, so that we now trade in line with the direction, so that we'll be able to follow the big players and make our own little money from the market. That is why we study market structure, and which is why I still repeat that in my first statement, I said understanding market structure. This particular topic is underrated. A lot of beginner traders tend not to take this particular topic so serious. So understanding market structure is one of the most important aspects of analyzing and trading the Forex chart profitably. So now let's talk about another phase of market structure. So let's say you understand the characteristics of market structure, and we come on the chart like this. We come on the chart like this, and then we see, oh, the market is in an uptrend. So whenever you see that the market is an uptrend, what is going to be your next action as a trader? I'm asking you a question now. Hello? Can you hear me? So what I'm trying to ask you is that let's say you understand characteristics of these three types of market structure, and then you come to your chart, you open your MT4, MT5, or you open your trading view, and you want to trade GPB USD, and you just discover that the market present characteristics of an uptrend. So in that regard, we know that it is an uptrend. So what is going to be your next action as a trader now that you discover it is an uptrend?
I'll be looking to buy, to become a
Yes,
buyer.
yes. You'll be looking to become a buyer. So now I want to demonstrate something here on the uptrend in regard to that question. So let's say if you look at this uptrend, the market just break this one. The market just break this higher high. This is the current price of the market. So the market break this higher high, which means this uptrend is still valid, right? So now, just like you answer me, it is an uptrend, and you are going to be looking to become what? To buy. You are going to look for opportunity to buy. So now we are going to wait. This is where the price is now. If we enter here, if we start buying here because it is an uptrend, it is not a perfect approach. It is not a perfect way to enter the market, right? So we are not going to buy here. Remember, when the market is moving up, it keeps creating impulse correction, impulse correction, impulse correction, impulse correction. So now this is the impulsive move here, and this is the current price of the market. So what are we going to do? We are going to wait patiently, and that is why when we are talking about in trading, people keep saying, oh, you have to be patient. Patient is very important in our trading success, especially if you want to see consistency in our result, consistency in our trading. We really have to be disciplined. We really have to be patient. Discipline to be patient for the market to come to where we want the market to come. But psychologically, human psychology is this. We are trained. Oh, okay, this is human psychology. I don't know, not that we are trained, but naturally, this is how human being behave. You know, psychologically, as a buyer, we always want to buy something, even in US, we want to buy something at a discount price. So that is why whenever maybe Apple launch their new phone, their new iPhone, people are looking for discount, right? Samsung, people are looking for discount. As a buyer, you always have that mentality. Psychologically, you want to buy that particular thing at a discount price. And as a seller, if you are selling something, you always want to sell that particular product or that particular thing at a premium price, which is the higher price. So this is an uptrend, which means we are going to be a buyer. So we have to come into the chart with that same psychology as a buyers, with that same attitude, because despite the fact that the ForeX chart is represented by candlestick, it's still human beings. It is still human beings that are controlling the market. It is physical human beings. It is human beings' emotions that is being displayed here on the ForeX chart. So when you want to become a buyer, always have that mentality as a buyer to buy at a discount price or to buy at a low price. So if you come on the chart as a seller, if the market gives you reason to become a seller, then you need to come into the market with that mentality to become what? That mentality to look for the higher price for you to sell in order to maximize profit. So don't forget that. So let's say this is the current price here. Let's say this is the current price. So let's say this is the current price of the market here at this point here. So this is the current price when the market was here. So this, let's say, this is the current price of iPhone 15 Pro Max at launch date, right? They just launched, Apple just launched iPhone 15 Pro Max, and this is the current price. Let me type. What's going on? Okay, let's say the current price of iPhone 15 Pro Max is $1,000, right? So $1,000. So your friend bought this iPhone 15 Pro Max yesterday at Apple shop at $1,000, right? And you saw the phone, you like the phone, and you want to buy the same phone and probably the same color, right? And your friend say, okay, I'm going to take you to the same shop so that you can get your own iPhone 15 Pro Max. And your friend, and this morning you guys went to the same shop and you realize that the price of that iPhone 15 Pro Max has gone higher in price. This is the current price of the iPhone 15. Now, the current price is no longer $1,000. Rather, it is now $2,000 here. It is now $2,000. So as a buyer, the price is too high. It is the same phone, the same iPhone 15 Pro Max, the same color, the same capacity. And your friend bought it at the rate of $1,000 and you come this morning and they are telling you $2,000. Psychologically, as a buyer, this price is too high for you to buy. So what are you going to do? You know that there's always going to be a discount price. There's always going to be a drop in price. Or say, okay, I'm going to wait next month. I'm going to wait next week for iPhone 15 Pro Max to drop down in price. I know that they are not going to bring the price of iPhone 15 Pro Max back to $1,000. At least if they can give me for $1,500, I'm going to buy. This is how buyers think, right? So you are not just going to buy $2,000. Even if you have the money, you don't want to be a stupid buyer. You don't want to be buying things because you have the money. You psychologically as a buyer, we want to buy at a discount price, at a lower price, right? So it's okay, I'm going to wait for iPhone 15 Pro Max to drop in price so that I can buy. If they can give me 1,500, I'm willing to buy. But if they are not ready to give me for 1,500, I'm not buying, right? And okay, let's say you wait for like 2 days and the price of iPhone 15 Pro Max drop back in price. Not even 1,500, it dropped back in price at the rate of $1,300 here. And you just discover, oh, iPhone 15 Pro Max has dropped back in price to $1,300. This is a good discount price for you to buy, right? It is a good discount price for you to just come into the market and then get your iPhone 15 Pro Max. This is how we reason in Forex trading. So you are going to buy